we have a market that has become bifurcated. Developed markets have done well over the recent time frame. Emerging markets have done pretty poorly by any measure, and China has been, I think, the big drag on that performance. Do you see any reason to begin seeding money into emerging at this stage on the hope that we may actually have bottomed here over this cycle?
I've put some of my own money into emerging markets over the last few months, just because I think this is a good time to pick it up. The emerging markets have had a terrible run really for 10 years now. They've been underperforming the States for 10 years, and I think we are going to see a change. So from a long-term perspective, I am putting some in, but it's with the recognition that, and again, we look at it in this book, we should look at demographic model for growth. And China's been massively outperforming for 30 years, but no longer. It should be growing at only about 4 or 5%, given the share of adults to dependents in the population. And that's gradually going to be slowing. So we're not going back to the boom time of 2006-8. I mean, I wouldn't assume that. And along the way, it's a lot of the frontier economies that are going to be facing up to some of the hardest challenges in the next few years because of that debt default issue.
And can I ask you, as we discuss Japan, you obviously have been a historian of the Japanese economy's attempt to come back to something that looked like the pre-property bust 80s. And we've just had decade after decade of missed opportunities in spite of the government's attempts to fiscally stimulate. Is Japan anywhere close to turning the corner, or are we just going to continue to see the same kind of failed attempts to galvanize growth back in this economy for some of the reasons actually that you've been mentioning in your book, the demographics and the long-term trends?
Well, I mean, there's two things to say about Japan. First, on the China issue, what's been concerning me for about a decade or more is that China would end up having the similar problems to Japan through high amounts of debt. They had a low fertility rate, they had high savings, they could afford to pump up property prices and have a real estate boom. And in Japan, that blew up in 1990. They've never recovered. And China's debt levels now on the private sector side, the state banks included, have done the same thing. We're at the same level of debt today in China as we were in Japan 35 years ago. So I am concerned. I mean, so I might be feeding a little bit of money into EM, but I am worried about it going wrong. And in terms of does Japan ever turn this around? We're seeing a fascinating experiment right now. You've been talking about it just this morning. This super cheap yen, the central bank still doing all it can to try and get any inflation back. Will it work? I have to admit that I'm using Japan as almost the front end. This is looking too far into the future. Japan is showing us our future, and it's not great from what I can see, but I can't get beyond that. They feel like they are at the forefront of the time-travelling economists. I'm looking at the countries that are decades or generations behind.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.